Welcome to Deloitte's Debriefs Tax webcast series in Asia Pacific. Our webcast today is from our Indirect Tax series and is titled Indirect Tax Developments on Electronically Supplied Services and e-Invoicing in Asia Pacific. My name is Richard McKender and I'm a tax partner based in Deloitte, Singapore. I have the pleasure of hosting today's webcast. I have three speakers with me today, Shrenik Shah, Candy Tang, and Nu To Van. Shrenik is a tax director based in Deloitte in India. Candy is a tax partner based in China. And Nu is also a tax partner. He's based in Thailand. You can access our bios on the left-hand side of the screen if you want to know a bit more about us all. Before I introduce the agenda for today's webcast, I'd like to take a moment to highlight some of the features of our webcast console. First, all users are on listen-only mode. If you have any content-related questions, you can submit them at any time in the Q&A box at the bottom right of the screen. We'll do our best, of course, to respond to your questions during the presentation. Second, all PC users can maximize or minimize each box at your convenience during the webcast. You can also explore the icons at the bottom of the screen. If you want to download today's slides and related publications, please go to the Downloads and Links box. On the other hand, mobile device users can view the slides and answer the survey on screen. Third, if you require an attendance record for this event, you can download your CPE certificate by clicking the Request CPE icon at the bottom of the webcast console. Now, let's move to the agenda and we'll go through the topics we're going to cover off today. I guess we've already done the introduction to the webcast and to the speakers. So today we're going to be focusing on the e-invoicing rules in China. We're going to then look at the e-services tax and e-invoicing regime in Thailand. And we're going to be looking at electronically supplied services rules and e-invoicing in India. We'll then do a wrap-up and we'll have time for Q&A. Next slide, please. This brings us to the first polling question of the day. And the question is, are you familiar with e-invoicing? And your options are, yes, of course. We have to use it, but I would like to learn more about the trends in the region. Not really. That's why I joined the webcast today. Slightly tongue-in-cheek, what's e-invoicing? And then even more slightly tongue-in-cheek, but maybe for those of you who want to preserve some face, then prefer not to say. So if you could please indicate your vote on today's first polling question. While we wait for that response, let me ask Shrenik a question. Shrenik, at the time e-invoicing was introduced into India, it was suggested it would make the task of compliance and reporting a bit more simple. Has that been your experience for taxpayers in India?
Hey, Richard, great question, and let me try to answer that. The straight answer is the expectation has been met to a great extent. For example, the transaction level reporting which happens in output supply return GSTR1, that is auto-drafted based on the e-invoicing data reported by the taxpayers. Similarly, the input tax credit statement, which is called as GSTR2B, that is also auto-populated based on GSTR1 filing done by the taxpayers. And finally, the summary return, which is called GSTR3B, that is auto-drafted based on the GSTR1 and GSTR2B. Right? So, to that extent, the taxpayers get an auto-drafted report or a return readily available. They need to make some metrics and then file those returns. However, there are still need to reconcile the auto-drafted returns, which takes a while, and that involves some bit of complexity.
Thank you, Shrenik. So I guess the summary is yes, in principle. I appreciate that. Okay, thank you for the votes and for the indications. I guess the majority of you, or the larger portion of you, are saying yes, we use it, but we'd like to understand where the region is going. And followed slightly behind by not really. That's why I'm here today. That is well noted too, and a small proportion of you are starting from ground zero or don't want to admit. Thank you very much. Appreciate that. So that helps us, I guess, also in terms of kind of the level of the responses that we want to, how we want to kind of introduce the topics and so on. And I guess without further ado, let's move to China. And Candy, can you tell us what's going on in China?
Sure, Richard. Let's firstly look at the China GDP and tax revenue collection over the past 5 years. As you can see from this chart, the China GDP has been growing steadily over the past 5 years. The growth rate was slightly slowed down in 2020 due to COVID, but it was then picked up to 8% in 2021. However, at the same time, the tax revenue was not growing in the same pattern and slightly dropped in 2020. This is mainly because the Chinese government published a series of tax reduction policies to help the businesses, like many other countries did. As you can see, the China tax was mainly from the VAT, which is the one in orange. The VAT is the largest tax revenue of the Chinese government. While trying to reduce the VAT burden of the taxpayers, the Chinese government is also investing a lot on the e-invoicing with the aim to reduce the compliance burden of the taxpayers and enhance tax controls at the same time. So if we move on to the next slide, you can see the latest development of the Chinese e-invoices. Next slide, please. Yeah, here we have outlined the journey of the e-invoicing in China. As a matter of fact, the e-invoicing has been a hot topic in the past couple of years in China. The e-invoicing started from B2C business in 2015. So if you have dinner in a restaurant and ask for a tax invoice, the restaurant will issue an e-invoice to you immediately, while you can download that in PDF format. Then the Chinese government started to explore the e-invoicing solution for B2B business in 2020. And you may hear the word of OFD, which is the Chinese equivalent to PDF, to present the B2B e-invoices. It was once speculated that the OFD form of the e-invoices might be rolled out in China by 2020. But the latest development is that both PDF and OFD forms of the e-invoices may be replaced by a brand new e-invoicing system called the fully digitalized electronic invoices, FDEI in short, very soon. The FDEI is far more advanced than the PDF or OFD e-invoices in that it is fully digitalized in terms of invoice issuance and delivery, which I'll elaborate later in this session. The FDEI is currently in pilot stage with selected taxpayers in 3 regions only, but expected to be rolled out to more taxpayers and more regions in China gradually within this year. Richard, back to you.
Thanks, Candy. That does raise the question, which is there on the slide as well, but let me ask it. So if the timeline is yet to be clearly known, when and how can taxpayers be prepared?
Yes, Richard, this is a very good question. The short answer is that it depends. It really depends on the complexity of the company's invoicing process. For example, how many VAT invoices that need to be processed on a monthly basis, how many steps to process the VAT invoices, how many systems that are related to the issuance of the VAT invoices, etc. If the process is quite complicated and the system is not advanced, I would recommend those companies start sooner rather than later to at least understand the new requirements of e-invoicing, perform the gap analysis to understand the gaps, and map out the actions to be taken, etc. Once the actions are available, then the company can plan for when to start to work on the changes on the process and system, depending on the internal process and time needed to do the changes. One thing which is very clear is that the time left for the companies to get ready may not be long based on the past experience. For example, in the past pilot, the rule was released only a couple of weeks before implementation. Now let's move on to look at the key features of the FDEI. I have summarized the key 6 differences of FDEI compared to the existing paper and PDF or OFD form of the e-invoices. First of all, this FDEI may be in the form of electronic data without being converted to a specific page layout file like PDF or OFD. That means once the FDEI is issued, it will immediately arrive at the recipient's tax account in the form of electronic data. The issuer of the FDEI can send an email with the link to the FDEI to the recipient for notification purposes, while the recipient can open and view the FDEI in PDF or OFD form if needed. The template of the FDEI is shown on the right-hand side of this slide. Secondly, the FDEI still need to be issued through the Golden Tax System, which is the government portal in China, like the normal invoices now. So once the invoices are issued, all invoicing information will be automatically transmitted to the tax bureau system and then delivered to the recipient's tax account. However, there is no need for the taxpayers to purchase any devices to issue the FDEI. They just need to get connected to the government's portal to issue the invoice, which is very convenient. Having said this, for companies who need to issue substantial amount of VAT invoices, they still need to get their system interfaced with the government's portal to automate the VAT invoice issuance. If otherwise, they can only issue the invoice manually, which may not be efficient from an operational perspective. Another major breakthrough of the FDEI is that it allows companies to self-customize the invoicing information. As many of you may know, the template of the VAT invoices in China is fixed and cannot be changed. However, under the FDEI, the companies can add more invoicing elements like the PO numbers, delivery or shipping numbers, etc. on the invoices. So this can help better manage the reconciliation of the invoice and accounting entries, and also facilitate the communication with the customers and the vendors. Another major change is the total invoicing cap. Under the current VAT management process, each invoice has a limitation of the amount that can be issued. Also, one taxpayer has a limit of how many pieces of VAT invoices they can issue on a monthly basis. Hence, it is normally seen that companies have to consolidate multiple system billings into one VAT invoice. Under the FDEI, all these restrictions would be gone, and each taxpayer is granted a total invoicing cap, which is automatically calculated according to certain preset rules in the tax bureau system, based on certain factors, like the company's tax compliance rating, industry standard, historical records of invoice usage, etc. Hence, the taxpayers need to pay more attention to their compliance rating. If their tax compliance rating is adjusted down, this may affect the invoices they can issue and potentially affect their accounts receivables, because many Chinese customers request to get VAT invoices before making the payment. If we move on, we can quickly summarize the main differences of the FDEI compared with existing paper and e-invoices. I think I've basically explained all these just now. Well, I would like to highlight the last point in terms of invoice ecology. Under the existing paper and e-invoice regime, there are only 2 system suppliers who can offer the gateway connection to the government's portal, the Golden Tax System, to issue the VAT invoice. However, under the FDEI, the government allows more qualified system suppliers and even larger group companies to connect to the government's portal to issue VAT invoices by themselves. This actually opens more options for the companies to select based on their situation and business needs. Next slide, please. In terms of the impact on businesses, clearly, the FDEI is far more efficient and cost-effective and creates lots of opportunities for companies. For example, From cost-saving perspective, the delivery cost of paper invoices can be saved, which can be quite significant if the company's invoice volume is huge. Moreover, the storage cost can also be saved when the e-archiving is available. The current storage requirement of accounting-related documents, including the VAT invoices, have been extended to 30 years in China. So you can imagine the storage cost cannot be low. Apart from cost saving, the FDEI also opens lots of opportunities for companies to enhance tax management. For example, the FDEI removes the hard drive or hard device requirements and also simplified the invoicing cap, which opens the opportunity for companies to centralize the invoice issuance process and even management in one location. This invoice management centralization has been discussing by many big MNCs for years, and we may see it happen under the FDEI. Moreover, as explained earlier, the FDEI allows the companies to self-customize the invoice elements, which can make the e-invoicing information more consistent with the accounting information, and also with all invoicing information available in electronic format. This makes it easier to do the big data analysis based on the invoicing and accounting information. We are now helping a very large Chinese state-owned enterprise to develop the big data analysis module to help them better understand the company's current situation and facilitate the business decision on certain promotion plans. This is another area we consider can add more value to the businesses. Having said all these, we also acknowledge that with the FDEI, the tax bureaus also have the capability to do more data mining and pinpoint the potential audit target and specific audit issues. As a matter of fact, the Chinese tax authorities have already been on this journey in the past 5 to 6 years. While the FDEI will provide more information to them, this will bring more challenges to the taxpayers, because if the taxpayers do not get prepared to upgrade their system or their analysis skills, then they will be surprised when the tax bureaus call them and ask for explanation on certain matters. This is one of the key challenges that we can foresee comes along with the FDEI. Let's move on to the next slide. So recommendations. To get ready for the FDEI, the companies need to take certain actions. First of all, the company needs to streamline the invoicing work process and identify the processes which need to be changed to accommodate the requirements of FDEI. We have been in discussion with several clients to see whether the current invoicing process can be used for FDEI and what simplifications can be made. Moreover, if the company would like to explore the centralization model, it also needs to consider how to deal with the redundant employees and work reassignment, etc. Apart from process, the company is also recommended to look at the system upgrade requirements. System is clearly very crucial to help manage the invoice from issuance, validation, posting, until archiving in the end. In particular, we would recommend companies consider building a company-level invoice pool to store and track the status of the invoices issued and received. For example, how many invoices are received, how many are posted for accounting booking purposes, how many have been used to claim input VAT credit, how many are credited, etc. We consider this invoicing pool can help the company better manage the invoices based on the status tracking of each invoice. Moreover, system can definitely help to do the big data analysis, which I just explained. Without a robust system, it would be very difficult to manage the e-system invoices in an efficient way and capture the opportunities offered by the e-invoices. In addition, as the FDEI offers self-customization of invoicing elements, we think companies can take these opportunities to add more elements, like the PO numbers, delivery numbers, to facilitate the business communications with the counterparties and also facilitate the accounting reconciliation. Companies can start thinking about these additional elements based on their business needs now. Last but not the least, the companies are recommended to pay more attention to their tax compliance rating, which can influence the company's total invoice cap, which then impact the business on a daily basis. Also, the tax compliance rating can also be a risk indicator when tax bureaus perform scanning of the potential audit target. Next slide, please. What lies ahead? So from government's perspective, the FDEI is a brand new trial for e-invoices and very promising. The government's plan is to roll out this FDEI program to more taxpayers as soon as possible within this year. The government will also allow more qualified third-party service providers to connect to the government's portal to facilitate the e-invoices. It's also the government's plan to integrate the existing e-invoices in PDF or OFD form to FDEI. So in the future, we will only have one form of e-invoices in China. From taxpayers' perspective, they're recommended to take certain actions now, which I just explained. So for example, like review and streamline the current invoicing work process, consider how to take advantage of the e-invoices and data to empower business operation and maintain or enhance their tax compliance rating. So that's all from my side on China. Over to you, Richard.
Thank you, Candy. Very interesting. We move on to a second polling question, this time focusing on electronic supply of services rules. We'd just like to know from the audience where you are on those. So again, the four choices. So electronic supply of services rules, first, cause me compliance issues in multiple countries. Secondly, affect my business in a few locations where those rules are quite broad. Thirdly, don't affect my business at all. Or fourthly, I'm not sure, and I joined the webcast to try and learn a bit more about them. So if you could please just indicate where you are from your company's perspective with regard to electronic supply services rules. While we wait for you, then Candy, let me ask you a specific question on China and electronic supply of services. So Candy, China doesn't seem to have any such rules requiring overseas digital services providers to register, charge and collect VAT on the services they provide into consumers in China. Is that strictly true? And, thank you. And do you think SAT might reopen that?
Yeah, I think your understanding is correct, Richard. Currently, we do not allow the foreign suppliers to register in China if they do not have establishment to do business in China. I think the SAT in China knows the issue, and they have discussed this before. But from an administration perspective, they have not considered to implement anything yet. Because I think China is a large country, and if we allow the foreign suppliers to register, collect and charge VAT, then it will create lots of administration burden to the local tax bureaus.
I see. Thank you, Candy. That's very useful. Just in time, then the answers came through. So thank you very much, audience. Okay, so interesting outturn on electronic supply of services rules. So a larger portion of you are saying not really sure. That's why I'm here to hope to learn some more. Well noted. About a third of you say that it affects your business in a few locations where those rules are broad enough. 20% of you say it does cause me compliance issues across the region or in multiple countries, not necessarily just in Asia. And 10% of you say no effect at all. So interesting. Okay, so we will cover off a bit more detail as we go through these other two countries. And if you have questions, then you can please post them into the Q&A box and we'll pick those up. For now, let's move on to Thailand. And Nu, can you give us some details of what's happening in Thailand from a e-invoicing, e-services perspective?
Sure, Richard, and thank you. Yeah, so maybe I can start off with the ESS, e-services tax in Thailand first, and then after giving you a brief update on that, I'll touch upon the e-invoicing system in Thailand. And so for the e-services tax in Thailand, Thailand implemented its ESS since the 1st September 2021. And under its ESS, they impose a VAT on electronic services that are provided by foreign e-service providers and platforms to Thai customers. So it focuses purely on B2C transactions and essentially focusing on taxing e-services to non-VAT registrants in Thailand. Once registered, companies subject to the ESS tax are not required to prepare tax invoices, but they do need to prepare output tax reports. And also, as you can see from the slide, registered companies are not allowed to claim the input tax. As mentioned, the ESS tax is limited to B2C transactions. So for B2B transactions, the reverse charge mechanism will continue to apply to the supply of electronic services. Thailand's ESS has a very broad definition of electronic services, which covers most online activities. Activities such as downloading services, music and movie streaming services, as well as advertisement services on websites and applications are all covered under the ESS in Thailand. Companies providing such services to Thai consumers and whose annual turnover transactions exceed 1.8 million Thai baht, which is approximately $58,000, will be required to register and pay VAT in Thailand. In late October 2021, only less than 2 months after the ESS was implemented in Thailand, the Thai Revenue Department published an updated FAQ document regarding the e-services tax. Simply because there were quite a number of questions following the implementations from companies, overseas companies that were providing services, and with questions whether or not their services were covered and whether or not there was a requirement for them to register in Thailand. And one example was that questions were raised particularly in relation to payment services and also service provided by online travel agencies, OTAs. According to the current FAQ document, these services are considered electronic services if they are delivered over the internet or any other electronic network, and the nature of such services is essentially automated and it's impossible for the service provider to deliver them without IT. Another example on the clarification in the FAQ document is on the clarification on digital audiobooks and ebooks. The document clarifies that although ebooks are exempt from the e-services tax, digital audiobooks that are not sold along with a physical book or ebook are not considered ebooks in Thailand. And therefore the sale and subscription fees of digital audiobooks are subject to the e-services tax in Thailand. Moving on to the next slide. As you can see from this slide, it's only 5 months after the implementation, there are around 123 non-resident VAT registrants for the ESS in Thailand. So far, what we've heard from the Revenue Department, the revenue that they've collected so far has exceeded their expectations in the first couple of months. And most revenue that was collected from the ESS were mainly related to advertising services and online sales activities and membership fees for music and movies, streaming services, as well as games. So far, from what we understand, the Revenue Department does seem that there is some initial success on the ESS in Thailand. We do see some more questions from foreign service providers on the ESS, particularly whether or not their services are covered because of the broad definition of the online services under the ESS. So it does look like that the government will be looking at expanding and widening the scope for the companies to be caught by the ESS in Thailand. So this is something that, particularly for foreign companies that are providing online services to customers in Thailand, to pay attention to and to really assess whether or not they are caught by this new ESS regulation. So that's a short update on the situation in Thailand. So perhaps we can move on to the e-invoicing system in Thailand. Next slide, please. So Thailand started its e-invoicing journey back in June 2017 with an initial focus on large and medium business operators and slowly with the intent to move on to smaller business operators. And similar to most e-invoicing systems in other parts of the world, Thailand's e-invoicing system allows companies to electronically issue tax invoices and receipts to its customers that contain all required particulars similar to a normal tax invoice, but only with a digital signature or timestamp. To be eligible to adopt the e-invoicing system, companies must be Thai VAT registrants, and they need to have an effective internal control system to be able to prove that the e-tax documents issued to the recipients contain accurate and complete information that are required for the normal tax invoices. Currently, the adoption of the e-tax invoice and e-receipt system is still on a voluntary basis. So the timeline that you see on the slide, the expected implementation timeline is the original idea from the Tax Revenue Department, but so far they have not made it mandatory yet. But as you can see from the next slide, although the system has been implemented for more than 4 years already, the uptake has still been rather slow. If you look at the accumulated numbers of the VAT registrants in Thailand that have registered for the e-invoicing system, it's slightly over 1,000 companies. So a relatively low uptake. And from the names of the companies that are currently using the system, those are mostly the large company with a huge number of VAT transactions. Perhaps if we move on to the next slide to provide a bit more details on the e-tax invoicing particulars. So e-tax invoices must be issued and delivered to customers for every sale of goods or provision of services immediately at the time the liability takes place. And as mentioned, it must contain all the required particulars of a normal tax invoice. Companies that have implemented the e-invoicing system can upload the e-invoicing documents in 3 different ways. One is to upload the information to the Thai Revenue Department's e-tax website. Secondly, to actually have a host-to-host connection with the Thai Revenue Department system and to connect and transfer the information directly to the Thai Revenue Department system. And the third method is to use the third-party service provider to transfer the information to the Revenue Department. To incentivize companies to implement the e-invoicing system, as I mentioned, it's still a low uptake. The Thai Revenue Department has currently allowed a double tax deduction for companies that are investing in e-invoicing preparation systems, hardware or computer and equipment used to prepare, receive, and deliver or store e-invoicing documents. And there are some conditions and criteria for those expenses in order for them to be allowed double deduction to be met. And also, these expenses must be incurred during the period of the 1st of January 2020 up until 31st of December 2023. So, what lies ahead for the e-invoicing in Thailand? So again, like I mentioned earlier, the government is trying to incentivize and encourage companies to really implement the system, although it's still not mandatory. But they do provide tax benefits to actually incentivize those companies to implement the system. From a taxpayer's perspective, still a more or less wait-and-see approach and little bit of a reluctance to really implement the system. The companies that actually have implemented so far the e-tax invoicing systems are mostly companies that have huge volume of transactions. So what do we expect to see next? We do expect more incentives from the government for companies to implement e-tax invoices. Whether or not the government will eventually provide a mandatory rollout for e-tax invoices, it still remains to be seen. But similar to what Candy has mentioned for China, it does make sense for companies to at least assess whether or not implementing an e-tax invoicing system makes sense for them, because ultimately, particularly if you look at the Thai government's direction, they do want to create a more digital economy within the Thai society. So ultimately, we do expect it to become mandatory. But whether or not that's going to be within the next year or the next 5 or 10 years, that is still not known. But for companies, it is recommended to have at least look whether or not this makes sense for them to start looking into implementing the e-tax invoicing system. So that's all I have for Thailand. Back to you, Richard.
Thanks, Nu. Really interesting to see where Thailand is going, both with electronic supply of services rules being so broadly defined as to pull in an awful lot of potentially kind of non-digital service providers, and also with the e-invoicing rules currently being kind of voluntary, but seeing quite a large number of taxpayers getting involved. We can come back and explore that at the end if we have time, but for now let's move on to look at India, where they're very well advanced with these matters. So Shrenik, what's India doing?
Hey, thanks, Richard. Hello, everyone. So what India is doing, we'll cover in 2 parts of the session. The first part will cover concept of electronically supplied services and applicability of GST on these services, which are commonly known as Online Information and Database Access or Retrieval Service, or OIDA service, as we call them before. And the second part will cover e-invoicing, which is again become happening because of a recent government notification last week. We'll cover that in detail in the second part of the session. So on the first one, the concept of electronically supplied services is not new in India. The government first introduced service tax on OIDA services back in 2001. And then in line with the OECD guidelines, the scope of OIDA services were expanded to have various other services also covered from December 2016. So while the service tax law replaced GST from July 2017, the principles have largely remained the same so far as taxability of OIDA services is concerned. And even in the 4th or 5th year of GST, the principles largely remain the same. But however, it's important to have a quick look at and a recap of what OIDA services cover, what is the taxability, and then what are the practical challenges which the taxpayers still face in the 5th year of GST. First of all, the concept and the liability of GST for OIDA services. And this is important because a non-resident service provider who provides OIDA services to a non-registered Indian customer is required to pay GST under reverse charge mechanism in case the service is called as OIDA service. Conversely, if the services qualify as those supplied to a B2B customer, the liability resides on the Indian recipient under reverse charge mechanism. So the Indian law defines OIDA services as the ones which are delivered over the internet or in electronic network. The supply is carried out in an automated manner with very little or human intervention. And the supply is not possible without a technology or digital means. So as you will notice, there are 2 important criteria, which is for provision as well as delivery of services. It should be in an automated manner, and there should be use of technology. And then the GST law specifically covers various services, as Nu also mentioned for Thailand, which typically qualify under the OIDA services. And they are cloud services, supply of digital content like software, music, videos, movies, games. Everything which is supplied through internet, they find place in the list. So with the background of the applicability, if we move to the next slide, it is important to apply various tests to evaluate the GST liability in case of OIDA services. And the first step is to determine whether the services or the content is supplied is it a digital content, number one. Number two, is it delivered on an automated basis? And number three, is it delivery with minimum human intervention? If the response is an affirmative for all of these three questions, then the service is definitely qualified as an OIDA or a digitally supplied services. A typical situation could be that an intermediary or an agent who is situated outside India, which provides OIDA services on behalf of a principal, in those cases as well, the non-resident supplier, even if an intermediary, should be liable to GST in India. And once you determine the liability, the next step is to determine whether the customer is situated in India. Now, this is a complex task because the GST law provides various means such as IP address, the credit card details, etc., to determine whether the customer is situated in India or not. But there are often challenges in getting accurate details for these aspects as well. Right? And lastly, one has to determine whether the Indian customer is registered for GST or not. This is again a problematic area for many of the OIDA service providers outside India because often the registration details or the details provided by Indian customers while procuring these items are not accurate. And this could result in an issue for the service provider to determine whether the registration status is correct or not. So on the next slide, while the liability is determined as we discussed, there's still some practical challenges in respect of OIDA services, even after several years of the introduction. For instance, the overseas suppliers often find it difficult to identify the address of the customer, as I mentioned, because the individual customers typically do not provide a complete or a correct address while procuring the services. Also, what happens is that inaccurate details about the recipients often compel the OIDA service provider to take a conservative view, and so of course means that there's going to be an impact on the cash flow because they'll have to pay tax on something which could potentially be a B2B supply. Also, in case the services are utilized in multiple establishments of the customer, there's always a challenge to determine what should the place of supply of the services, because again, multiple addresses, where to pay tax, that's something which is again an important question. And more recently, what we've been hearing from many clients is that the OIDA cell, the government has an OIDA cell. OIDA cell has been sending notices to various non-resident suppliers, whether or not they are having their business in India through OIDA mechanism, and asking and seeking from them various information in relation to their sales and supplies in India. Just imagine an MD or a CEO of a company situated outside getting the notice in respect of OIDA from India. Right. So in addition to what I just mentioned, there have been so recent changes in the law, and the GST law also needs to evolve. For example, recently the income tax authorities or the government in India announced applicability of income tax on virtual digital assets, which typically cover cryptocurrencies and non-fungible tokens, NFTs, as we call them. In our view, the days are not far when the government comes up with a similar notification or the clarification regarding coverage or otherwise of the virtual digital assets under the GST law, probably under the OIDA services. So yeah, these are some of the challenges and the difficulties. If you move on to the next section of GST invoicing in India, there are many things happening on this front, and it's extremely important for us to understand the implication on your business. As I mentioned earlier, we are currently in the 5th year of implementation of GST. And there have been steady and constant evaluation on the technology front, on both compliances for the taxpayers as well as on the tax administration side. So when the GST was introduced in 2017, the government introduced transaction level reporting for B2B and export transactions in GST returns. And then return filing was done on a single compliance platform for all the taxpayers across India. Then next year, 2018, the government introduced something called as e-way bills. E-way bills are typically the documents which are required to be generated on the government portal for transportation of goods from one place to another in India. Right? So this is again a huge change for the taxpayer dealing in goods. And later in 2020, the government came up with a big bang approach of e-invoicing, where real-time reporting was required to be done to the government portal. And while this is introduced in the phased manner, the first current threshold for e-invoicing is about 500 million rupees, which is equivalent to 6.7 million USD. And last week, the government announced a further reduction in the threshold to 200 million Indian rupees, which is equivalent to about 2.7 million USD. Right? And in parallel, the government has also gradually introduced robust mechanism for tracking and claiming input tax credit by purchasers. So this makes it essential for the sellers to report the transaction appropriately in their returns. So all the changes that we're talking about, they would not have been possible without an aggressive use of technology by the government, as well as by the taxpayers. And as India matures in the electronic compliance mechanism, the government has been using artificial intelligence powered by the technology very extensively to identify cases of non-compliances in relation. So in the next few minutes, let us look at how e-invoicing works in India and how it has been beneficial for the taxpayers as well as the government. And moving to the next slide. So essentially, e-invoicing involves the eligible taxpayers reporting their invoices, debit notes and credit notes for domestic B2B and export transactions to the government portal. The government portal is called IRP, which validates and authenticates the transaction. And on successful validation, the portal generates a digitally signed e-invoice, a unique invoice reference number, or IRN as we call it, and the QR code. And this QR code is required to be embedded on the face of the invoice. And for the purchaser, this e-invoice issued by the supplier becomes a valid document for claiming input tax credit on their purchases. In parallel, the government also drafts the GST returns based on e-invoices generated by the taxpayers. And all these details are also made available to the purchaser on the GST portal. So this helps the purchaser essentially to claim input tax credit or determine the eligibility to input tax credit. As I mentioned earlier, currently the threshold of e-invoicing, the threshold turnover for e-invoicing is 500 million Indian rupees in any of the previous 4 financial years. So in terms of numbers, if you ask me, this approximately covers 2.16% of the total taxpayers registered for GST in India. While this number seems very small, because it's merely 2.6%, 2.16%, but this population covers approximately 31% of the total B2B and export invoices issued. So that's like a huge number. And with the introduction of e-invoicing for the smaller taxpayers within the range of 200 billion Indian rupees, this number is definitely going to go up, is what we believe. Now, so this change of lowering the threshold is definitely going to have a significant impact on you, whether you are a large enterprise or having an ecosystem of vendors, dealers, distributors, or you are a small entity falling within the threshold of 200 to 500 Indian rupees. For example, if you are a large enterprise, a large number of your trade partners, who are either your vendors or customers or distributors, they will potentially be covered within the lower threshold. And what this means is that many of these come from an organized background, and they have a relatively lower IP or technology preparedness. So any non-compliance or delayed compliance by these trade partners, especially the dealers and the distributors, could have an impact on your supply as well as delivery as well as availability of the goods in the market. Or if your vendor doesn't comply with the e-invoicing requirement, it will have a direct impact on your input tax credit. At the same time, if you are a taxpayer which falls into 200 to 500 million rupees threshold, you will need to ensure that you are well prepared for generation of e-invoices from 1st of April, and which could otherwise impact your billing and your working capital. And it will also have an impact on input tax credit of your customer, which could impact the overall business. So apart from e-invoicing, which we just discussed, there's also a requirement to have a dynamic QR code on B2C invoices issued by taxpayers whose turnover crosses 5 billion rupees, 67 million rupees, 67 million USD in any of the previous financial year. So there's an e-invoicing for B2B and export transactions and a dynamic QR code for B2C invoices. So like Nu mentioned, for Thailand, there's an aim of the government to have a digital economy. A similar aim persists in India as well, and we are moving towards that direction. Right? So while these are the requirements for the taxpayers, it's also important for us to know what the government is doing with the real-time data which is gathered by way of e-invoicing reporting by the taxpayers. So if you move to the next slide, the government has developed a very sophisticated AI-powered tools, which are called business intelligence and fraud analytics, or BIFA as we call them, BIFA tools, that help them not only in tax administration, but also detection of fraud. And it also aids them in making certain policy decisions. So BIFA tools make use of the transaction level information gathered not only from the GST returns or e-invoicing, but also the details submitted by taxpayers at the time of GST registration, claiming of refunds. Even income tax returns are used by the tax authorities to map the turnover reported in income tax versus what's reported in the GST returns. There's something called as Aadhaar, which is equivalent to the social security number. The government authorities also use Aadhaar details and the vehicle registration details, etc., to correlate various data points and come up with a very sophisticated analytics which can be used by the tax authorities during the audit. And to be honest, these are only the few known sources which we know of. The government probably could be using many more sources to identify the errant taxpayers. And what the government gets by analyzing all this data is a very sophisticated dashboard. The dashboard tells the tax authorities or the tax officer the gaps and anomalies between various reporting. Let's say there's a mismatch between GST turnover versus income tax turnover. It shows as a red mark or a red flag on the tax authorities dashboard. They also get a time chart which has a very detailed analysis and the trends as well as outliers at a taxpayer level and also at a taxpayer community level. So they can segregate according to the region or the industry in which the taxpayer performs or works. And so basically this data is used to identify non-compliant or fraudulent taxpayers. So while the government gets sophisticated, they use AI, it's also important for the taxpayers to be vigilant and craft a well-defined mitigation strategy with the help of data analytics, reconciliations, to be on the right side of the law and avoid any surprises during the audits and assessments. If we move to the next slide. So what the government did is that use of BIFA tools gave them various data points. And using those data points, the government has made certain legislative changes as well, gaps in the leakages. For instance, a significant change was brought about recently where the input tax credit can be claimed by a purchaser only if the seller reports invoice in their returns and that invoice appears in the inward return of the purchaser, which we call it as GSTR2B. Right? So till now, the government used to allow a certain amount of provisional credit to stop going forward. Similarly, the purchaser will get a invoice level flagging in the GSTR2B, which will state whether they can take input tax credit or not. So the task which a taxpayer will also usually do, it's something which is being done by the tax authorities to flag off ineligible invoice. At the same time, the government is also blocking the suppliers from filing their returns if they have not filed the return for the previous month. Right? So while the government is using the data for tax administration purpose, so the key parameters are also made available by them to the taxpayers. So the taxpayers have means and tools to determine whether they need to take a different approach so far as their vendors are concerned. For instance, for each taxpayer, the GST portal now shows additional compliance KPIs. For example, how much a percentage of tax liability is paid by the taxpayer in cash. Because if there's a lower percentage, it would mean that a significantly higher utilization of input tax credit, which could be again a red flag. Same way, as I mentioned earlier, the returns are auto-drafted, right? So how much percentage of the auto-computed tax liability is actually paid by the taxpayer during that month is also shown. And anything which is less than 100% would mean that there are changes made by the taxpayer in the auto-drafted liability, which would invite further questions from the tax authority. But if you're wondering how much of these measures, including the BIFA tools, will impact the actual tax collection and how does it help the government, the next slide will give you an answer. And if you move to the next slide, and as you note on that slide, there has been a steady increase in the gross GST collection numbers for the last few months. So April 2021, it's a tall tower owing to the financial year ending March 21, and similarly January 22 because of December ending and the annual return filing due date for many MNCs in India. And also February 22 is the fifth month where the gross revenue collection crossed 1.3 trillion Indian rupees in a row. So apart from an overall recovery in the economic activities post-COVID and introduction of e-invoicing, the government has got a good share of healthy revenue in the past as well as going forward. You can move to the next slide where there's a polling question. Richard?
Thanks, Renik. It's a really interesting detail there, which we would love to unpack if we have time a little bit later on. Let's do this polling question. With the Indian government putting a lot of emphasis on identification of non-compliant taxpayers, how do you ensure your input tax credit is not adversely impacted due to non-compliant vendors? So you have some choices here. So manual internal controls, use of a technology solution, or I don't know. Can you indicate if you have an answer for us on that particular question? In the meantime, Shrenik, let me ask you this. So you mentioned earlier that the government has lowered the threshold for e-invoicing to 200 million Indian rupees turnover a year. What are you telling your clients to do?
A very important question and a timely question, Richard. So the reduction in threshold means that it should not be seen in isolation. So many of our clients have started bringing their whole ecosystem of vendors, distributors, as well as dealers onto a single e-invoicing platform. So how this helps them is that this gives them a larger visibility and also has a control on the overall invoicing cycle for both their vendors as well as customers. And this is typically applicable in case of businesses such as consumer business, automobiles, oil and gas sector, where they usually operate in a large ecosystem of defined vendors and customers. So what it means is that one happy family of trade partners on a single e-invoicing platform, and it definitely helps them to achieve operational as well as cost efficiency.
I see. Thanks, Shrenik. Okay, so thanks for those of you that answered the question. So even split between those on the audience who are saying they would use technology solution, those on the audience saying don't know, and a much lower proportion, which I guess is good news, which is you use the manual internal controls. So I think we would see India government pushing towards technology solutions or technology tools to be able to do this work. Shrenik, I think you've got one last slide. Do you want to just cover off what's next?
Yeah, so this is an important slide for India as to what lies ahead for the government and more importantly for the taxpayers. So far as the government is concerned, the e-invoicing and real-time reporting coupled with robust input tax credit tracking brings in a very high visibility of potential areas where they need to focus for non-compliance. It will also help them to focus and have a targeted audits and assessments, which is also likely to be more efficient because the officers will be spending less time on verification of documents. They will go with a targeted approach. And lastly, this will anyway have a positive effect on the overall revenue collections. When we talk about the taxpayers, preparation in advance and a well-defined mitigation strategy, that's something which is a need of the hour. So, and this need not be only on the own data for facing audits or assessment. It is also important that they carry out an assessment, some sort of a risk assessment or risk analysis for their vendors on a one-time basis as well as on a recurring basis. This will help them to give much more visibility on their index credit. Right? And needless to say, going forward, it's going to be the whole ecosystem partners compliances which will have a bearing on the businesses for sure. And lastly, the inclusion of more number of taxpayers and transactions under real-time reporting will definitely bring in the efficiency and transparency in the whole reporting and compliance mechanism. So with that, we end the discussion of two interesting topics for India. Back to you, Richard.
Thanks, Shrenik. Okay, we have a minute or so before we're at the top of the hour, so let me just kind of pull that together a little bit and share some observations. So I think it is a fair statement to say that Asia is not consistent or homogeneous in its approach to the use of technology for indirect tax compliance. We've seen different approaches in terms of e-invoicing and also in terms of the taxation of e-commerce, which tend to be quite localized in how they, in what they tax and how those countries tax it. Even if the reporting processes themselves, in terms of simple invoice, or a standard GST return, which is pay only, are consistent. I think we can conclude that the rules for e-invoicing and for VAT and e-commerce are also not settled, and I think we should expect to see them continue to develop. We can point to the examples that we just heard from China, where we're expecting further rollout of FDEIs to taxpayers, where we're looking at integrating the existing e-invoice platforms, and we're looking at more qualified third-party software service providers to be introduced into the system. In Thailand, then, we learned that the timeline for mandatory rollouts of e-invoicing is yet to be announced. There are probably going to be some more incentives to help companies move on to e-invoicing. And it's worth noting that the electronic supply of services rules are extremely broad, and potentially could catch taxpayers who would not normally think of themselves as digital services providers. In light of the number of registrants that Nu was explaining at the moment, then that's something that I think is a significant risk for a number of taxpayers or a number of companies in the region supplying into consumers in Thailand. And in India, then, as Shrenik just went through, then we have the electronic supply of services rules, which apply to very specific sets of services. And for e-invoicing, then we're going to see more taxpayers being added in, moving to B2C, potential coverage of excluded sectors, and continued use, which is really interesting, and I think is a trend we will see across Asia-Pacific tax authorities. The use of the data by the tax authorities to start looking at risk matrices and ratings to enable further compliance audits and so on to be utilized. So the message I would say is this is an evolving space. There are very complicated rules. It's not consistent across the countries. So do take those points away and have a look at how you might be exposed or how you might be operating in the jurisdictions that might not even be China, Thailand, and India, and take care to make sure you get it right. Now we're at the top of the hour, so I think that is unfortunately all we have time for. I know there's a number of questions in the audience, and I appreciate that. For those of you that have asked questions, we will respond to you separately within 2 weeks. Shrenik, Candy, and Nu, I'd like to thank you, and special thanks to you in the audience for joining us today. I'd like to encourage you to fill out a short survey form that's going to pop up on your screen in a moment, and let us know what you think about the session today. If you joined us late, then the presentation will be archived. If you would like others, if you think others would benefit, then please do share the webcast via the share this icon, or let them visit the debrief website. Also, if you think of any other questions or comments, please do feel free to reach out to either me or our speakers. We'd be more than happy to talk to you about any of the points we raised today or anything else. Don't forget to tune in to our next scheduled webcast, which is from the Geography Updates on the 17th of March. It's titled Hong Kong SAR Budget 2022-2023 Commentary. And last, from all of us at Deloitte, thank you for your participation in Deloitte's Asia Pacific Tax webcast today. Thank you and goodbye.